So what's going on, YouTube? Welcome back to the channel. In this video, we're going to talk about BlackRock's spot Bitcoin ETF and how it's not the same as Grayscale's product. So there's been a lot of confusion here as news has come out regarding BlackRock's spot Bitcoin ETF. At least that's what they're calling it, which may have led to some of the confusion that is out there in terms of what this actually is. So ETF terminology can sometimes be very, very tricky, and fund management giant BlackRock's application for a quote-unquote Bitcoin ETF has raised a lot of questions. What actually is it, and how is it different to what Grayscale is doing with Bitcoin? So let's review very quickly. BlackRock's iShares unit on Thursday filed an application with the SEC for the creation of the iShares Bitcoin Trust. Now, the name and other details of the proposal sparked a lot of confusion among industry experts as to whether or not BlackRock was actually applying for an ETF, or was it a trust with properties similar to that of Grayscale Bitcoin Trust, GBTC. Well, the answer is not easy. It's kind of both. See, Noel Atkinson, editor of Crypto is Macro Now, said, quote, technically, BlackRock's proposal is for a trust, but it's a trust that allows redemptions. So it functions just like an ETF. So in this sense, Atkinson noted, the iShares product is nothing like GBTC, which has no redemption mechanism. The market hears trust and thinks it'll be just like GBTC with no redemptions. But that's not the case here. See, the key distinction is that an ETF for spot Bitcoin would be able to buy Bitcoin at the end of the trading day to bring the fund's assets in line with its trading price. A trust does not have the ability to do this. Now, a trust will thus occasionally trade higher and lower than the value of its underlying assets, sometimes substantially higher and lower. An issue currently facing GBTC right now, which has been changing hands at a huge discount, currently about a 40% discount to its net asset value for years. See, Grayscale, they've been attempting to convert its trust to a spot Bitcoin ETF for some time, but they've been rejected in that effort by the SEC, which cited worry about market manipulation, among other concerns. Now, BlackRock is hoping to get past the market manipulation, with, of course, CoinDesk reporting earlier on Friday that the fund manager's application includes a promise of, quote, surveillance sharing agreement between exchanges. It's interesting because BlackRock essentially owns everything. If this goes through, a lot of people are going to be upset because they look at this as a pushback against decentralization. They look at BlackRock coming into the Bitcoin space as a bad thing. And I guess there's some merit to that. However, there's also some positive elements to it as well. See, when Grayscale comes in, if you're already in as a retail investor, you would think that your investment would go up in Bitcoin. And it should, because when BlackRock comes in, it should bring in billions and billions of investment dollars. It'll legitimize Bitcoin. So that is why Bitcoin remains the top investment in all of crypto. It's the safest investment in all of crypto. And I understand the pros and cons of this. But at the end of the day, we're just Jimmys and Joes. What are we going to do about it other than make sure we're invested in Bitcoin? Of course, that's not financial advice, but I know I am. Been dollar cost averaging for well over a year. Appreciate you guys as always. Let me know if you got some value out of this video. We'll see you in the next one. Peace out.